Okay, good morning and welcome to this panel. I'm delighted to be joined by such great panelists. And actually, I'm just going to start by asking each of the panelists to introduce themselves in one or two sentences. So, Paul.
Hello, everyone. My name is Paul Taylor. I'm founder and CEO of Thought Machine. We do cloud-native core banking systems. We sell to banks. We're a B2B company, and we're a fintech selling to banks.
Hi, Matt James. I head scouting for UK and Europe for RBS. Basically, I spend my days looking for innovative tech solutions for the bank.
Nana Saito Nielsen, I'm the Director of Banking Operations at Go Cardless. We do recurring payments for businesses.
Good morning, my name is Rydian Lewis. I'm the founder and CEO of RateSetter. RateSetter is one of the most established peer-to-peer lending platforms. We have over 300,000 active customers. On the investor side, it is a low-risk investment. On the borrower side, we position it as a competitive alternative to a bank loan.
Hello, my name is Sophie Guibaud. I'm Managing Director at Fidor. We enable organizations to launch new digital banking experience with our middleware across Europe.
Great. So let me start with you, Matt. You work for a leading player, a banking player in the UK. Yep. What role do you see fintechs playing in financial services in terms of operating models and the way banks are looking to change?
Yeah, I mean, I think that the fintech ecosystem is really important, and I'd probably extend it beyond that into generally the tech startup ecosystem. I think there are very two important aspects that we recognize in that, and I know a lot of the other high street banks do too. And one is, if there's one thing about competition, is it drives creativity, and frankly, that's good for customers. And then the other aspect is, in this day and age, there is a war to access the best talent out there. And whereas in the past, people coming out of universities may have wanted to be investment bankers, actually now a lot of them want to go and work for startups, work in tech companies, doing exciting stuff. So to actually be able to access that talent, you need to work with the startup community out there to really be in touch with what's going on, particularly in the tech field.
Paul, if I just take sort of a slightly different view, one could argue that actually the way to serve customers best is to have more challenge for the banks and to have more challenger banks. Any views on that?
Well, yes. I mean, I think the challenger bank space in the UK is quite remarkable. It's very healthy. And let me just say there's no big bank that ignores the challenger banks. I think when they really this current wave started, 3-4 years ago, people thought, well, let's see how this unfolds. Now that challenger banks have got more than 1 million, several have got more than 1 million customers each. There we go. So, and we sell to banks. We sell to challenger banks. Atom is one of our biggest customers, and we sell to large banks. And Lloyds is another one of our biggest customers. And what we really want to do is give any bank, regardless of size, the ability to have a modern platform. And the end goal really is to, I think the big banks have had it, they did have it very easy for a long time. What really matters is what the quality of the end product is to the consumer in the street. And if it's done by a big bank or done by a challenger bank, what matters is they are competing properly, they're competing on a fair playing field. And if we can reduce the barriers to entry to people launching banks or people launching new offerings from banks, it's all for the good. And the competition will inevitably benefit the consumer, which is what most of us should really care about.
And do you see real examples of that happening in the UK today?
Well, I mean, I think I don't see anybody who's got all of it right yet. So the challenger banks have done very well, but they're still only offering a portion of what a traditional bank offers. I've seen large banks that have better apps and some parts of the bank that are quite impressive, but I still think there's a long way to go before everybody's really got everything there. There's still a huge amount of cost, huge amount of manual cost in the bank. And so I think it is, before we get what would be a very slick, low-cost, fully automated, large, hundreds of billions of dollars on the balance sheet type of bank, I still think we've got some way to go. But I do think the direction of travel is the right one.
I'm going to push you a bit on that, Paul. How far away do you think that is? Do you think it's a year, 5 years, 7 years?
More than a year. So what Thought Machine really wants to do is re-platform all the banks that come to us. And by re-platform, that means the whole bank moves on to a modern platform. And by that,
10 years?
well,
More than one,
I would say
10?
yes. Well, before 10 years. So I was
Okay,
challenged.
between 1 and 10.
Between 1 and 10. But it'll certainly be an interesting time when,
Okay.
if you get a few banks that are platformed and some other banks in their space haven't, because the ones who re-platform will have a deep competitive advantage.
Sure.
Yeah. But 3 years maybe.
3,
Well,
okay.
Why don't we put it there? Yeah.
We'll come back to that in a moment.
Invite me back in 3 years.
So, Sophie, we talked about existing banks, challenger banks, and clearly part of the topic here is collaboration versus competition. What's your view on that, and collaboration in particular?
Yeah. So I think like one of the key topics is that we are seeing collaboration clearly a lot between fintech and banks. Fintechs are enabling banks to provide fully digital experience, such as, for example, Zout Machine or Fidor, but also to provide additional services through marketplace concept to customers that the banks wouldn't have provided. But I don't think it's that black and white against challenger banks, because challenger banks are also using B2B fintech providers. So sometimes they are doing things by themselves, but they are also collaborating with other fintech companies to provide those experiences. So I don't think we are in a world where fintech banks are now collaborating against kind of challenger bank, which are also fintechs. I think it's much more collaboration across the industry, where organizations are starting to really focus on what they know how to do and really collaborating with others that are best in class in their services to really provide those experiences that the customers crave for.
So you could take the view that collaboration and competition actually, there's a continuum between them. What do you think it takes to move seamlessly between those? And in fact, do you think it's possible for an individual fintech startup to move and operate in both of those spaces?
Well, absolutely. I mean, we have seen that, I would say, with TransferWise, for example, that started like very pushy against banks, and that is now providing B2B services to them. And it's exactly also the same for Fidor. We started as a challenger banks. We developed our own middleware to actually provide this digital banking experience, because back in 2007, when we did it, well, there was not in the market what we needed to do that. And then, step by step, large organizations came to us to actually use our infrastructure to launch their digital banking experience. So there has been really potentially this willingness at the beginning to challenge the banks, and I think a lot of fintech companies are still doing it, but I think also a lot of them are understanding that sometimes it's a bit difficult to acquire customers by yourself, that it's expensive, and that actually providing the services to larger companies that have the budgets and to do so is actually a good way to go.
Oh, great, thank you. Nana, I know that Go Cardless has been very effective in leveraging existing infrastructure and perhaps giving a very practical example of how you can operate in different spaces, building upon things that are there. Any thoughts you have on this continuum between competition and collaboration?
Yeah, I mean, I think we see the banks very much as our collaborator. We are a payments company, and we use the bank's payments rail to move money from A to B, as simple as that, right? So that also means that, could we do it without the banks? We probably could, but it would take us much longer to do that, yes, because the banks, they form the essential infrastructure of for instance, the payment system as it is today, right? And sure, you can go out and try and build a network yourself. Visa and MasterCard have done that over the years, but it takes decades. And if we want to go into a new market, what's the quickest way for us to do that? It's definitely to go and partner with a bank. But it's a slightly different kind of partnership, because it's not the kind of partnership where the bank is basically using our product or our customer-facing application that we've done. It's a commercial partnership where we use their payment rails and we pay the bank for it.
Very good. Ridian, you clearly are one of the competitors to banks in the space in which you operate with RateSetter. Some might say that is very beneficial for the industry. Some might say, actually, it's a little bit of a flash in the pan and these things will come and go. I can guess your point of view, but what's your view?
Well, obviously, I don't think it's a flash in the pan. I think in peer-to-peer lending, there's fundamental change that's going on, and it takes a long time to prove that out. But we're entering our 10th year of lending considerable amounts of money funded entirely by investors as opposed to depositors, and with no loss suffered by any investor because of the prudence of our lending, the resilience of our operational processes, and our business model, which seeks to make it a low-risk investment and protect people with something called a provision fund. And it's designed to be a low-risk investment and a competitive loan. So by design, we are openly trying to compete with banks to be an alternative to people putting their money in banks as a savings product. We're not a savings product. We are an investment. So there's a big difference between those two things. But we are unashamedly and very clearly trying to offer a true alternative to the banking business model of lending and borrowing. And it does take a long time to prove that, but it's going well. And I do think that it will prove to be resilient.
So on this continuum of competition to collaboration, do you see a world in which it blends a bit more for startups in the way that you've described the business model that you have, or do you see yourself and others always staying at one end? So will we always have people across the whole continuum, or do you think we'll always have people who stay in some zones and others who stay in all parts?
I think it's obviously very nuanced. I mean, I think it's important to be really clear that you are a challenger and really clear that you'll seek to collaborate. But in the middle is all sorts of nuance, and I think it just depends on the type of relationship. So in some cases, I think people talk about collaborating with the banks as a bit of a euphemism for actually capitulation. But in some cases, I would say collaboration is working in the favor of the fintech. So, for example, GoCardless is able to enter markets very quickly using bank infrastructure. And so it cuts both ways, who's the winner and loser from that. And inevitably, there's moments when actually collaboration works in the interests of both people. For example, Market Invoice and Barclays is a good example of a product fit, which seems to make total sense to both parties as to why Barclays would want that product and why Market Invoice would be happy to provide that to them. So I think there's inevitably it's a continuum, but I think it's important that the fintech world does not just become all about collaboration, and these companies just slowly but surely get absorbed into the incumbents, because then companies are not forming. They're just providing a short flash in the pan moment of developing some technology and then eventually being absorbed into the incumbents. So I think that's the important principle.
If I could add to that, because I think you're right, because surely we do collaborate with banks, but it also depends on whether the banks can keep up with our needs, right? Because over time, if it turns out that the banks, technology-wise, also can't keep up, or price-wise, and we might have to go and look for other solutions. So I completely agree.
Yeah.
With the spectrum. Yeah.
What I would add to Nana is just it also depends on basically the decision of the banks to do that, because there are considerable revenue opportunities to actually be the dumb pipes and maybe focus on your existing target market, but let others focus on other niche segments and services. But to upgrade the systems and to launch new B2B offerings is really like basically a decision that the banks need to take.
So,
and I guess
Matt,
I am the bank here on the stage.
you're not getting great press here. Dumb pipes can't keep up.
Yeah,
So,
I mean, I think it's interesting. I think everything the panel makes. I mean, I think one of the problems one of the challenges of being an incumbent is you're sort of not only having to sort of rebuild the house while you're living within it, but you're also trying to replace, the transport infrastructure, the utilities, and everything else that sorts around that, while still trying to remain relevant to customers. And that's where I think as a bank, we see this very much as a portfolio of different approaches. So I think we absolutely welcome competition. We absolutely want to partner with fintechs. And you can see that in things that we do. So, I mean, you're from Accenture. We get involved every year in the Accenture FinTech Lab. That gives us great access to some fintech talent. It also enables us to give back and to give some mentorship to the companies that come through the lab. For the last 12 months, I've also been working as part of the FinTech Delivery Panel, which was sponsored by HM Treasury and facilitated by TechNation. And one of the things that I did there with the other high street banks is we developed a guide for new fintech companies so that they could get some insights into what it meant to work with the banks. What was the sort of due diligence the banks go through? What would you have to do to partner with a bank? Because I think once you've sort of been through the pain of it, you know, but just coming into, you know, if you're a startup, actually getting some transparency about what you're going to ask, what the banks are going to be looking for is quite a challenge. So if anybody is in that place, there's the snappily named PAS 201, which is a British Standards Institute document. If you go onto TechNation's website and you search for FinTech Toolkit, you can find it. That's been put together, as I say, by ourselves at RBS, NatWest, Santander, Lloyds, HSBC, and Barclays. So working with a number of the sort of more established fintechs to sort of guide us in the things that they learned. So
And just building upon that, I mean, we've talked about sort of the role of fintechs in this collaboration or competition continuum. When you see both sides in a way, because you are part of a bank and you're actively engaging with the fintech world and ecosystem, what things do you see banks in general needing to do in order to be most effective at engaging with the continuum?
Yeah, I mean, I always sort of say working in innovation at a bank, it's sort of part inspiration, part perspiration, and part frustration. And I'd say, you know, the one thing you see out there is the inspirational ideas that come out of people thinking about the industry different. And I think, you know, that's one thing that banks have to tap into. I think at the frustrating end, I think like any large organization, it's how you change the culture, it's how you change the processes and the governance to actually enable you to be agile and to adapt to pace. And that's, you know, as a large organization, that's always the challenge that you've got.
Yeah.
Paul?
So I would just say, you know, in this, it is a complex ecosystem with a lot of moving parts and forces, and you talked about talent. So, you know, regardless if you want to collaborate or compete with banks, you know, the talent is, fintechs are doing well in the war on talent. And so, you know, that is something that isn't as widely recognized as it might be. And so when a lot of, you know, young graduates want to work for fintech companies, I mean, that nearly of itself creates a self-fulfilling prophecy and defines that that's where the future is going to be. And when banks, so I don't think, you know, banks have to make decisions about what they're going to do. And I think when they see that you know, so many new ideas are coming out of fintechs, it does change the game. So it's not just about these various things. I also think if you're going to be a B2C fintech company, you don't have to be just good at the technology, you don't have to be good at the idea, you've got to be very good at marketing, you've got to be very good at customer acquisition. There's so many things to get right, and you know, to be a great universal fintech at scale is a lot of things to get right, which just again makes collaboration you know, a more welcome option.
I mean, those points all make a lot of good sense. I mean, one observation you could make is that actually some of those things were also true at the time of the dot-com boom. If you go back to 99, 2000, I mean, the war for talent was very similar then, and you could argue that some of the attributes were the same then as they are now. Yet we also saw a cycle, and so my question is, what do you think is the same today compared to the dot-com boom, and what do you think is going to be different?
Well, it's very interesting, and people in the tech community, I mean, it's not like they've completely forgotten about this. I think what they'd say is if you take the main metrics of customer acquisition, revenue and profit, so then if you just had customer acquisition and nothing else that was sufficient, that is not sufficient. Now, you could still argue that customer acquisition and revenue are sufficient to grow and not profit, as you see from recent IPOs and everything else. But I would say that people are a lot more grounded. I would also say, though, that the penetration of tech into everybody's daily lives is well proven. And I don't think, no matter what anybody says, I don't think the future is going to be less tech. You know, a few valuations may go down and things like that, but I think the direction of travel is, in terms of what technology we adopt, is a one-way street, and that is, you know, cloud native, agile, 24/7, single source of truth, big data. That's all going to happen. The more debate is which particular organizations are going to be the winners, you know, and have a seat at the table. I mean, I'm primarily a technologist or software engineer, so you know, I want the technologies to succeed, and it's a kind of detail really as to which institutions are the winners. Yeah.
Really, I wonder if I could just turn to you to build upon that. I mean, one of the things I would say is different is particularly in financial services, the regulatory environment and the understanding or the level to which there's forward thinking about some of these things. In some ways, people would say it's a double-edged sword in that for an industry such as financial services, one of the strengths of London is actually the regulatory environment. One would say one of the barriers is regulation in itself. Any thoughts on this whole topic?
Yeah, and just going back to the dot-com boom very quickly, I mean, the dot-com boom was right. I mean, in the sense, in the long run, it called it very right. It just got ahead of itself, and as you say, it's all about picking the winners, and because there's going to be lots of losers. So I think these things always indicate there's something up, and there is something up in fintech, and there are going to be some dramatic changes and some big winners.
And some losers.
Absolutely, absolutely. But there's something going on, and that's not going to disappear. On the regulator, and I think it's worth saying the role of the regulator and government, actually, particularly in the UK, has been remarkable, and that's what's allowed this ecosystem to thrive. Because without that air cover, if you like, and sense of belief, I do think people get a bit fatalistic about the fact that nothing can change, and that ultimately the economics of the incumbents are such that there's just no point taking them on, you know. But I think with that kind of incredibly positive message from government through the regulators has really helped encourage investors to keep backing these propositions right through to profitability, and then the future is open at that point. It is a double-edged sword in that obviously as soon as you try and regulate outcomes, which is a sensible long-term thing to do, you do create, it does slow the innovation down, or at least it forces the innovation to say, right, this is the model that we're going to go with, and we're going to regulate that one, and we're going to lay down the tracks that way. And if that comes too early and the tracks are slightly wrong, then that's not a good outcome. So I think it's just important, and I think this is where the UK has been quite good in allowing a very fertile period where it isn't over-regulated, in order to see what works, what doesn't work, and then when it's clear what is working, then maybe that's the time to kind of lay down the kind of clear rules with consumer protection in mind, but not too early, otherwise you regulate the wrong thing.
Okay. Nana, any thoughts on this?
Yeah, I agree. I think the UK regulation has been really, really good. One of the great examples is the FCA sandbox, and we will be a part of the 5th cohort with Starling Bank, where we are testing variable recurring payments. And yeah, it is great that the environment allows fintechs to go out and test solutions like that. And I think you really realize that when you start to go outside the UK and start going into other markets, you really do appreciate sort of the openness around the regulators, or the Bank of England for that matter. It's go to the US, for instance, right? And it's a really, really different story with state-by-state regulations, where it will take you, 7 years to get licensed in all states possibly, and a lot of money. So yeah.
I mean, one of the features of the financial services industry that the fintech industry serves is of course a lot of legacy infrastructure, and in some ways part of the mechanisms for ensuring stability and consumer protection is to be very managed in the way certain aspects of infrastructure are changed. And in some way there's a paradox there, because everyone's excited about the ability to change and to add things and to complement. On the other hand, everyone's constantly frustrated about the pace of change and barriers. How have you handled that paradox in the work that Go Cardless does?
I mean, I think in particular in the UK, if you look at the payments landscape right now, there's a lot of interesting things happen with the new payments architecture, the consolidation of the different payment schemes into Pay.UK, sort of the opening up these schemes to non-banks. So I think that balance, we'll see where it goes. I think the new payments architecture is still very new, but this balance between keeping the infrastructure really, really solid and safe. I mean, Bax, for instance, is from the 1970s, so I think, yes, it is probably about time that we get some new infrastructure there, but keeping it pretty stable, because it is such a fundamental part of society, right? But then still opening it up, so you can get some new inspiration and ideas in there. I think it's a good balance that we hopefully will achieve here.
Great. Sophie, just building upon that and taking a broader view of practical things to overcome and barriers to overcome. Any thoughts on that as sort of institutions traverse the continuum between collaboration and competition? What are some of the practicalities that you've encountered and think need to be overcome?
Yeah, so I think it's really, so as I was mentioning a bit earlier, it's really about making the decisions, right? So a lot of those banks are B2B, B2C, but focusing on end customers such as SMEs and consumer. I think there is a big opportunity for the banks to become B2B and provider to actually fintech companies, such as Nana has mentioned for Go Cardless. So there is really a multitude of things to do, but it's basically decisions that needs to be made by the banks themselves. I think it's what also we have seen a bit with PSD2 implementation, is that, yes, it needed to be implemented. How do we do the minimum? But in the end, well, in the future, it would be good to think about revenue opportunities and actually what it brings to the banks, really.
Great. I think we're running close to out of time. So maybe we just close with each panel member just giving two pieces of advice. So one piece of advice for existing banks and players in the financial services industry, and a second piece of advice for fintech players, given all of the stuff that we've discussed and all the things that you're engaged in. Which two pieces of advice would you give? Sophie, I wonder if I could start with you.
Yeah, so going for fintechs, I would really read the fintech delivery reports done by Matt. No, but I'm not kidding, because I have been working with fintechs, and what you realize is that they don't know how to navigate big companies and big banks, and so some banks are really well organized, and others maybe need a bit work in progress, and they spend a lot of time working on proof of concepts that maybe won't become true, and not earning money and losing time, and I mean it can create a lot of trouble. So I think for fintechs to really put a point in understanding how the prospects they are talking to works is very important. For banks, going back to, focusing on their B2C and B2B and opening up their infrastructures for others to tap into niche markets and create new revenue opportunities.
Great. Rydian, two pieces of advice, one for banks and existing players, one for fintech.
Well, I'd say...
maybe the same for both.
Or maybe the flip side of the coin. I mean, I think common sense, really. I mean, I think on the fintech side, is inevitably you have to try various different things, and as soon as it's clear that something's not working, you must try and scrap it as quickly as possible, and that can be difficult because there's pride and there's elements of sort of vested interest in it. But and equally, if things are going well, just to try and take a long-term view and see off the kind of impatience that comes from other voices and so forth. So very simple. If things are going badly, quit, and if things are going well, just take a long-term view, and a very long-term view, as much as you can. And then on the bank side, I think it's very difficult, because maybe it's best not to engage at all on the subject, not get drawn into the debate, because, or else, I would say that just to get to understand exactly what's going on, not at a high level, but exactly what the minutiae of the legislative or technological change that's going on, and really work out whether that's a long-term threat to your business. And if it isn't, I would just deliberately ignore it. And if it is, then I think the sooner you buy one, as opposed to just talk about it, the better you're doing for your shareholders in the end, because you're seeing it off as quickly as possible.
Very good. Nana, 2 bits of advice.
Yeah, exactly. I mean, I think I agree with you, the B2B play in the revenue for banks, but the banks need to do that. They need to be able to assess fintechs correctly. Not all fintechs are the same, but banks very often perceive them as high risks. And being able to understand what the risk is and not just a perceived risk, I think is really important. On the other side, the fintechs also need to be able to give the banks a comfort. Like, take the due diligence seriously, take the AML requirements seriously, the privacy requirements seriously as well. And if you can find that balance, I think there's a good sort of groundwork for collaboration.
Very good. Matt.
Yeah, I guess from my perspective, in terms of the incumbent banks, I think they're very familiar with build, they're very familiar with buy. I think they need to get better at collaborate and co-create, and I think that's potentially where the future is, to be able to, as I said earlier, access talent, access new technologies, and to really transform the industry. I think in terms of fintechs, probably the advice I'd give there is be very clear on what your special sauce is, what your USP is. I think the thing that you must never forget is that you're not only competing with the banks, you're also competing with other fintechs, you're competing with the big tech companies, you're competing with the GAFAs. And if you're looking to partner with banks, that's true. From a bank's perspective, what we're looking for is the right solution for the customer, and that doesn't matter whether it comes from a fintech or a big tech company. And therefore, being very clear on how you're sort of solving a pain point for the business, for the customer, is very important.
Great.
Yeah.
Last but not least, Paul.
Yeah, thank you. Yeah. So the advice I give to banks is basically a generic one about cloud computing. The advantages of cloud computing are so compelling that if you do not move to it, you won't survive, and I will state that. And just going back to the legacy, there is no trade-off. There is nothing that the legacy technology is better at. How you migrate is a thorny issue, but the cloud computing, you need to really fully embrace that. As for fintechs, I'd say we operate in a world where a lot of fintechs do one part of it well, but what really make a difference is all the parts can integrate, it can be frictionless, and we can have a universal offering, and that's something that large banks do. So before we have a complete fintech, bank, I think there's a lot more pieces need to be added.
Very good. Well, that brings to an end the panel for this morning. So thank you very much for your attention, and a big thank you to members of the panel this morning.